Howdy folks, welcome to the Daily Coin. My name is Rory and today is Thursday, February the 8th, 2018, and I have the very distinct honor and great pleasure of welcoming to the show for the first time. You know him, you love him, you hear him over on Rogue Money on a regular basis, and I am talking about London Paul from the Serious Report. London Paul, welcome to the Daily Coin.
Well, good afternoon, Rory, and it's a pleasure to be on. Thanks for asking me to come on.
Well, I'm glad that you're here, and I understand that Dr. Jim Willey's the one that gave you the nickname London Paul.
That's correct. He did indeed.
Well, if somebody's got to give you a nickname, that's I guess that's as good a spot as any.
Exactly.
And you offer over at the Serious Report, you do a subscription service. It's $4.75 a month. At the end of the show, I'll give you a chance to kind of describe your service and everything that you've got going on over there.
Yeah, thanks. We'll talk about it then, yeah.
But for now, let's jump in. And what I wanted to start with, Paul, is the Belt and Road Initiative. And a couple of years ago, there was an article that came out that discussed discussed gold trade settlement along the Belt and Road Initiative. At the time, it was called the New Silk Road or One Belt, One Road. And there was a meeting between the director of finance out of Kazakhstan, or finance minister out of Kazakhstan, with the folks at the Shanghai Gold Exchange. And that meeting was specific on gold trade settlement. Now we learned that Russia has a crypto ruble coming out. I think that it would be kind of naive to think that China's not working on some type of cryptocurrency to replace the paper yuan. And we also see that Beijing and Moscow are both developing a BRICS gold market. So we have a lot of different monetary scenarios happening all at the same time and under a couple of different umbrellas. Primarily, though, the Belt and Road Initiative. And what do you see happening with gold in particular, with the Belt and Road Initiative, and also with the BRICS alliance?
Well, I think it's probably worth discussing the BRICS gold internal and a trading platform as a good starting point. But maybe if we back up even from that, the ultimate aim is to bring about the end of fiat currencies and the return of sound money, so gold, silver. And also included in that will be asset-backed cryptocurrencies. I've talked about this before, and I very much stand by that. That is the future, and that is what will underpin the new financial paradigm. So, for example, as you say, the BRICS Gold internal trading platform is going to reshape global economies enormously, and it will bring an end to effectively the US fiat dollar hegemony and ultimately the capitalists. Now, put a bit of sort of context in this. There's been this seismic flow of physical gold from west to east via London and the refineries in Switzerland for many years. But in what now amounts to kind of this telegraphed new gold standard by the BRICS, this is another step forward. And effectively, it's part of the whole de-dollarization process of the global economy. Now, China and Russia cleverly kind of realized many years ago that all they had to do was implement a new gold standard and sound money, and they never needed to actually fight US hegemony head on. And of course, they were significantly aided by the fact that the vast majority of people in the East and in Asia see gold as real money, something the West has kind of largely forgotten because of all the paper wealth wealth in inverted commas that's being created. And the BRICS itself, obviously, and I'm sure everybody knows, but for anyone who doesn't, it's obviously Brazil, Russia, India, China, and South Africa. Now, it's always underplayed to the extent of what it is because it accounts for around 40% of the world's population and around 25% of the world's domestic product. So it's pretty significant. Now, the adoption of physical-backed precious metals is obviously going to cause the demise of the paper gold trade markets. And the BRICS structure will establish this multinational gold trading platform, which will be 100% physically backed. And to put it in context, it's worth talking about some of the paper markets, the London Gold Clearing stats for 2016. The total trading volume in London over-the-counter gold market was estimated at the equivalent of 1.5 million tons of gold. Jeez. And the volume of 100-ounce gold futures on New York's COMEX reached 57.5 million contracts during 2016, or about 180,000 tons of gold. Now, when you consider there are only approximately 180,000 tons of gold, give or take, that have actually been mined up to date in the world, the paper market is utterly unsustainable. And eventually these paper markets in London and New York will either blow up when the paper price of gold drops to zero, or when just a fraction of investors insist upon receiving physical gold in return. So paper gold trading markets are coming to an end. When? I don't deal with timescales. They will happen when it happens. But the reality is that London and New York markets are slitting their own throats by their market suppression of the gold and silver prices. So undoubtedly higher gold and silver prices are coming. Eventually there's likely to be an arbitrage between the West and East prices, and that's going to become a reality. Hasn't quite happened yet. Occasionally you get an arbitrage of $20, $30, but that's not really of any relevance. But as we said, in essence, what is coming is the ascent of sound money, the death of the US dollar, and that is, in essence, what this much vaunted financial reset is all about. What will happen is basically fiat money dies, sound money returns, and it will be a pretty quick process. It's not something that's going to drag on for months on end. Obviously, the consequences of that will be pretty severe. Particularly if the US ends up with a devalued dollar, although it's not exactly clear what will happen in that regard at this point in time. It's likely to be the case, but as we said before, from Russia and China's perspective, if the US plays ball and the Trump administration does what it intends to do, which is to take a wrecking ball to the cabal, they will assist and try and backstop and help the US in a post-US dollar world, effectively. But the birth of asset-backed cryptocurrencies and the adoption of sound money via gold and silver and the collapse of fiat currencies, which have obviously only been backed by promises that future generations will pay through debt, inflation, and ever-rising taxation, is all going to come to an end. So from the BRICS perspective, what that means is those nations will be able to all trade together, backed by gold, and at the end of the day, you can have gold trade settlements. So when you have, say, Russia and China, there'll always be a net sort of, for one nation or other is likely to import more or export more, and so therefore there's going to be a trade deficit on one side. That can be settled in physical gold. And the mechanism will allow all these nations to trade very seamlessly as a result of this. And this is really the start of the whole process of having the return of a gold standard, where Russia and China will have gold-backed yuan, gold-backed ruble, which are rumored to be coming out simultaneously at some point. When, nobody knows, and at the moment it doesn't really matter whether we know precisely the date. That is something that is coming, and of course, anything like these gold trading platforms is just a mechanism by which you can facilitate gold trade in that regard. Now, obviously, aside from the BRICS, you also have the EAEU. Now, I'm sure probably once again, most people are aware of what the Eurasian Economic Union is, but for anyone who isn't, there's basically 5 nations: Armenia, Belarus, Kazakhstan, Kyrgyzstan, and Russia. Now, that's their trade union. Now, what is expected to come about at some point is that they may well have their own gold-backed currency called the Altian. But as part of that process, they're also now looking at having some sort of crypto asset to back the entire Eurasian Economic Union. Now, recently, the Russian Prime Minister Medvedev, he went on record as saying that when he talked about crypto assets, and he said we shouldn't lock ourselves within the framework of the national model, because the EAEU, it is perfectly possible to pay with cryptocurrencies. So what he's looking at doing is saying, well, as a union, we can look at it closer because our economies are tightly connected, which of course those nations are. But it's worth pointing out at this stage as well that the EAEU is going to be part of the One Belt, One Road initiative, which we can talk about shortly. So what they're basically now looking at the EAEU is a way of synchronizing all those nations in terms of using a cryptocurrency. Now, that will be obviously asset-backed. It's likely to be certainly gold, probably. Now, in terms of the EAEU nations, we've already seen developments in the likes of Belarus, who signed a decree on the development of a digital economy in December, including blockchain and cryptocurrency technologies. Kyrgyzstan wants to use cryptocurrencies in public procurement to help reduce the level of corruption. As we've said, Russia announced that they'll be issuing their own national cryptocurrency, the crypto ruble. That's something I spoke about probably 2 months before they even announced they were going to do it, and people were surprised and didn't think it was going to come about, but it most certainly is in the future. Slated probably for adoption some point in 2019, but perhaps maybe sooner. And of course, it's no coincidence that Kazakhstan wants to enter the cryptocurrency market as well, because their government signed a cooperation deal with a Maltese firm, Exante, to develop cryptocurrencies. And they've got pretty ambitious plans because they've already begun work to lay the foundation for some sort of fintech ecosystem, as they refer to it, with the aim to become an international hub for blockchain operations and the development of digital asset markets. Really? And the Kazakhstan, yeah.
That's interesting, because Kazakhstan is one of those countries that a lot of people don't even know about. They certainly can't find it on a map. But it's a country that, and you can correct me if I'm wrong, Paul, but it seems to be a vitally important nation, not only geographically but economically. As you said, it's one of the more important members of the EAEU, and it's a member of the SCO as well as the Belt and Road Initiative, and it creates the border, or part of the border, between Russia and China. And I looked at it just as a standalone nation, and they have got it going on over there. I mean, this is a nation on the move, and they are. My guess is that within the next 10 years, they're going to be an economic powerhouse. Or am I wrong in that?
Yeah, I think it stands out for all these nations along the One Belt, One Road initiative, which will stretch from Vladivostok in the east to Lisbon in the west in terms of Eurasia, effectively. And yeah, Kazakhstan will be very much part of that. And that's why they're looking to sort of develop these initiatives as part of the EAEU. But certainly, we shouldn't look at the EAEU as being a discrete entity. It will very much be part of the One Belt, One Road initiative and vice versa. But I think the interesting thing of development of an EAEU cryptocurrency, which is asset-backed, it will enable nations within this trade bloc to transact kind of efficiently, effectively. It will eliminate corruption on all levels. And it will provide a mechanism for trade settlement. And as we said, it will be utilized in conjunction with probably a gold-backed Altian currency, which will be adopted by all those EAEU nations. So, of course, as we say, the EAEU gets integrated into the One Belt, One Road seamlessly. So what effectively we're witnessing in a broader sense is the unfolding of currency and trade unions, which will utilize sound money, asset-backed cryptocurrencies, which will underpin the new global kind of economic, financial, political and social paradigm. So it is that significant. People tend to look at the EAEU and don't see the significance, but a lot of these initiatives will get rolled out in the East and in sort of Central Asia before it obviously ever gets rolled out in the West. So it's a pretty good indication of the future direction of how global finance in a broad sense will change.
Do you see a single monetary unit of account coming out, like either a ruble or yuan or some other type of coin, if you will, or currency that is across all of these platforms? Or will the EAEU bloc have its own currency and BRI have its own, or the One Belt One Road have its own currency, and the BRICS have another currency. The underlying asset that ties the various currencies together is gold. Is that how you see it playing out, or do you see more of a one currency type of situation?
No, there'll never be one. The whole kind of one world currency was kind of a cabal dream that's gone up in flames. No, that's not going to happen. I mean, nations like Russia are not going to give up the ruble,
No,
and China's not going to give up the yuan.
no, no. I wasn't.
Yeah,
I wasn't
yeah.
trying to lead
Oh
us
no,
down
no,
some
I'm not. I mean, of
conspiracy
course,
road.
no.
I was just
Oh
trying
no,
to.
I know you weren't. I'm just kind of highlighting that because I know people do get a bit worried if we say, well, there might be a single currency, then it starts to feed
Right.
the fear in that regard. But
Yeah.
no, I mean,
No, we don't want
certainly,
to do that.
no, absolutely not.
No, it's no. It just seems like, because we've got, there's so many nations that are involved with the Belt and Road Initiative, with all of these different alliances. I mean, just the three or four that you and I have just been discussing. We're talking about 15 or 20 nations here, and we're talking about three or four different alliances that could potentially have three or four different types of assets, or even 15 different assets, or 15 currencies. I'm sorry, not assets, but 15 different currencies, and they're going to have to be tied together somehow. And it
Well,
would go ahead.
well, yeah. But of course, we need to drop the European Union into that equation because the European
Wow.
Union currently obviously has the euro. Now, the European Union in its current form will disappear. I mean, it will be replaced by precisely what the European Union should have always been, which is sovereign nations trading in free trade agreements, in unions. You might get certain nations that will join together, but that is the way it should be now. The question is, what currency would they have? Well, I think it'd be a bit hard for people to swallow having a euro and then telling them it's going to be replaced by a gold-backed euro. No, nations will return to having their own old currencies, which will be gold-backed. Those kind of
Okay.
discussions are already in train. Principal nations involved in that is Austria, Finland, Germany, and Holland. And that's what you'll see a return to. So, I mean, this is always a question that nothing's set in stone. I mean, in 20, 30, 40 years' time, you may see a very different picture in terms of global currencies, but this is kind of the first stepping stone towards replacing the kind of fiat-backed Ponzi scheme of a financial system and replacing it with sound money. So it's a stepping stone process. But certainly in terms of Russia having, for example, like a crypto ruble. Now, the crypto ruble is going to be useful because to Russia, not only in terms of the fact that it's going to be pegged to the ruble, it won't be mineable, it will be the only legal cryptocurrency in the country. And they are looking at attracting foreign cryptocurrency investments. They can use it to strengthen the economy because they can avoid the impact of international sanctions, although they've pretty much very deftly avoided that in the process too already. Now, as I said, that's due to be officially presented and discussed at some point in 2018 and rolled out in 2019. And the government and the Central Bank of Russia are also expected to prepare regulatory measures for initial cryptocurrency offerings and cryptocurrency mining as well by this point in July. So it's worth also noting that kind of recent legislation has been passed in Russia with regards to cryptocurrencies and their implementation. We're not going to go into massive details because you could talk for an hour about that. But they're taking this very seriously, as are the Chinese. And very much cryptocurrencies will be part of the future Russian and Chinese economy, just not what they deem to be what I call first generation currencies. And I can explain a little bit why. Now, whether people agree or not, the Russian central bank's attitude is they remain cautious with regards to the current cryptocurrencies because they feel that they're not supported by real monetary means. People will disagree with this. I'm only merely saying what their viewpoint is. And they can only be used, they think, for transactions in a very limited form. So they want to apply legislative regulation in this area because they perceive cryptocurrencies as not serving as a means of wealth preservation or accumulation, because they don't see any material value to support them. But they understand their use, and they can be used to some extent and in certain situations in transactions. And they believe until the state assumes responsibility for this legislative regulation of cryptocurrencies, their fear is the citizens will bear all the risks themselves. And we've already seen in extreme cases where exchanges have been hacked, people have lost their coins. There's a lot of concern from Russia's perspective that they don't want to put their citizens at those risks. So they want to share the risks and the activities of all the participants, and therefore they're going to have to create their own platforms. And people will disagree and say this is centralization by the back door. Well, whatever people agree or disagree on, that's what Russia and China will be doing. So the idea of outlawing and banning cryptocurrencies in current generation is because of their fear of it. They don't share the view that in the long term these will have any particular future. And from my perspective, the idea that, for example, Bitcoin is going to be adopted globally as a payment mechanism, I just don't see how that is possibly going to happen. People will disagree, but I see no evidence to suggest that will happen. But when a nation adopts a cryptocurrency like the crypto ruble and then extends it as a payment mechanism across their own nation, and that could quite conceivably integrate into the EU cryptocurrency, whatever that might be, and that could integrate. Not sure we'll ever see a one belt, one road cryptocurrency, but nations will adopt them, and currency unions will adopt cryptocurrencies, and they can very easily interact and work with each other in a broad sense. That doesn't mean first generation cryptocurrencies are going to disappear overnight and never to be seen again, but I don't personally see that they will have the impact that people expect it to. But then it's rather like the evolution of the internet. The sort of trailblazers in the days of the internet largely aren't really around anymore, and the internet's evolved and grown, and that's how I see cryptocurrencies. So as much as I'm skeptical of first generation ones, it very much blockchain particularly as well as cryptocurrencies will very much have a place in the new financial paradigm. I think we have to make that point very clearly.
Yeah, I think that the blockchain technology is going to be with us from now on. I think that the developments that are going to be built on top of that, we have no idea where it's going to go, but it is one of the more significant pieces of technology to have come out in quite some time, and it's. But I agree wholeheartedly with you, Paul, as far as these first generation cryptos. They're not going to be around. Bitcoin is not going to be adopted. It's moving in the opposite direction of adoption. Australia just said, they said in May of 2017, yes, Bitcoin is a currency, and then December they said, well, no, it's not. And by the way, we're going to freeze all your bank accounts that are associated with any Bitcoin. And so that's kind of what I see. Japan has been really the only nation that's really stepped up and said, yeah, Bitcoin's good, we'll accept it. And they've been kind of working within that framework. But once again, I agree wholeheartedly that I think that as time goes by, crypto ruble, things like the Fed coin or whatever the Western world comes up with, the Euro coin or Fed coin or this coin, that coin, whatever it is, I think that they'll push them out of the way, if you will. I don't know that they're going to go away, but they're not going to be there. I don't know what's going to happen with them, but I don't see them having staying power.
Well, I mean, I think the other thing is that I said prior to when the CME issued Bitcoin futures that this would impact the price, and people going, well, it's decentralized. It will make no difference. Now, maybe it's a gigantic coincidence that Bitcoin price has been smashed to pieces. There might be a whole bunch of other reasons, and you mentioned nations that are trying to shut down exchanges. We've got a lot of credit card companies refusing to accept Bitcoin transactions, which I actually agree with, people should not be using credit to transact in cryptocurrencies given the volatility, but that's a separate matter. But what I think is interesting is back in December, the CME group said that Bitcoin was likely to become a new asset class in its own right, such as gold or stock, which can be traded by major investors and regulated, and is not simply a cryptocurrency. And that's something I took note of. And also we need to factor into our thinking the CME is the world's largest derivatives exchange. So it launched the Bitcoin futures contracts, and they expected major investors to take part in Bitcoin futures. Now, the interesting thing there as well is the CME said at the time that this is a very important step, these futures contracts in Bitcoin's history. And they said it will regulate and tame it into a regular type of instrument of trade with rules. Now, when they came out with that, people were dismissing it. And I said, no, you have to pay attention to this. Now, of course, such futures contracts allow investors to short sell Bitcoins. Mm-hmm. So it places it squarely in the same crosshairs, from my perspective, as the issues that have plagued gold and silver for years, namely that the physical asset price was able to be contained and manipulated by paper markets. So now, whilst the many will continue to say that Bitcoin is decentralized and such moves are not possible by the CME, the same is also said with regards to gold and silver, and we have seen what's happened to the price of that. So that undoubtedly, from my perspective, back in December, represented a challenge to Bitcoin's independence. And lo and behold, a mere 2 months later or so, we're seeing clear evidence that I think it has had a significant impact on the price. And of course, my first question is, why did the Securities Exchange Commission squash all previous attempts to create Bitcoin ETFs? Why suddenly did they go, oh, it's okay, you can have them now? Right. From my perspective, does it have anything to do with consumer protection? I mean, after all, what the announcement via the CMA does is allow the creation of what amounts to paper Bitcoins. That's all it is, because you don't really have any. It's all traded in dollars, and it's what can be used by the likes of Wall Street and the banks to control the value of the market.
Correct.
So from my perspective, that was a big problem, because Bitcoin futures are not settled in Bitcoins but in dollars. So what that proves is, or provides the capability for, is unlimited use of dollars to control the dollar price of Bitcoin. And of course, the official narrative is that they want to protect investors in what they say are unregulated markets. But I mean, this kind of regulation is just not very helpful. In fact, it's quite detrimental. And there's no doubt, to some extent, Bitcoin is seen as a threat to central bank fiat-based debt-ridden currencies. I don't think it's as big a threat. And I don't think a lot of these attacks that people are seeing is the cabal trying to attack Bitcoin because they see it as having a future, and in terms of global adoption and sitting outside the financial system as it exists now. And it's precisely why gold and silver were placed on futures exchange, so they could control the respective prices and the perception of king dollar. And the intention is probably to do precisely the same thing to Bitcoin. Yes. Now, the argument is it designed to try and control and destroy Bitcoin? I think that's a bit of an extreme sort of viewpoint. But the perception seems to be, if we control Bitcoin, we can control other cryptocurrencies. Now, to some extent, in terms of price movement, that's very much the case. I mean, you see Bitcoin violently going north. Other cryptocurrencies do likewise. Not necessarily all of them, but a lot of them, and vice versa. When the price gets smashed recently, we see a big, huge fall in prices of other cryptocurrencies in the process. I think there's a likelihood that in the future they may introduce other, futures contracts, maybe for Ethereum, maybe for Litecoin. I don't know for certain, but that is a possibility. But I think what we have to be careful of is to assume that has no influence. I think it very much has had an influence. And there's been a lot of short selling to drive the price down. And when you put it in conjunction with all the other headline grabbing news regarding, nations banning cryptocurrencies, etc., it has deflated the price quite considerably. But also, I just think the other issue that we have to take into consideration is that the global uptake for the likes of Bitcoin in terms of populations across the world is not that big relatively. There's a reasonable contingent of people in say, Japan, China, and South Korea and places. But if you look in Western nations, relatively, it's still a pretty small sort of user base, and it's not grown as fast as people imagine as they expected it to be, I think.
No, and I think that what's happened yesterday with the SEC and CFTC meeting, I think that as far as them discussing regulating cryptocurrencies, I think that that's to encourage people to get into the system. I still see cryptocurrencies as being this first wave, as being an assimilation program, and that Bitcoin was. I think that Bitcoin was allowed to run up to $19,000, almost $20,000, to get eyes on it worldwide, and it was highly effective. And like you just described, Paul, the derivatives market, the CME group, and their futures contracts have really wrestled the price of Bitcoin. They brought it way down, $13,000, or about 70%. So, and that's what I see anyway. And I really don't see the way that I see it is the cryptocurrencies that are in play right now are a way to get people comfortable with cryptocurrencies, with being cashless, with moving people away from cash and onto a digital system. And then you have the introduction of a crypto ruble, where it's being discussed in a positive way, and it's going to bring stability to this market or that market, and it's going to allow these situations to happen and those situations to happen, and international trade will be a lot easier and so forth. And the next thing you know, everybody's gone cashless, and that to me is a little bit terrifying. Maybe my tinfoil hat screwed on a little too tight this morning, but that's just the way that I see it.
Yeah, I'm not concerned about the whole cashless society argument, because even from the cabal's perspective, and I always draw it down to one simple fact. Obviously, let's just talk about the world we live in now. The thing that underpins one of their biggest cash cows, which is the drug industry globally, that depends on cash. You couldn't have a cashless society and that operates.
Okay, so thank you for saying that, because that's been a big question that I've had for the past couple of years about the cryptocurrencies and cashless society in particular, is that right there, because the international drug trade makes up 8% of global GDP. 8% of global GDP is illicit drug trade. Hello. So,
and of course, it's not. It also underpins a lot of the corruption, crime in terms of cash. Now, the issue is, even in the new financial world, there'll still be cash. People will still pay with things with cash. Now, there is an argument which could say, well, the cabal, the deep state, whatever people want to call it, we're happy to see decentralized cryptocurrencies because they can still manipulate the markets, and it can create this cashless society with all records easily traceable. And it also allows them to take part in ICOs with zero traceability. And, hackers can have a field day. And if there's ever a universal take-up where people replace, bank accounts with wallets, but it's all a bit of a pipe dream from that perspective. I don't think people should fear the idea of to all intents and purposes, how often do I pay for things in cash now? Very little. You have small amounts to pay for odd things, but largely you pay everything with card. So it's electronic transactions. So I think people are slightly over concerned and over worried about this threat, and particularly given, and I'm happy to say, I've said it everywhere else, the cabal is a spent force. But rather like any empire, it doesn't fall and collapse overnight. It takes a number of years, and we've been in that process for quite some time. But they're certainly on their last legs. They don't have the strength or capability anymore to take on the world, and we only have to look at the foreign policy in recent years. We don't need to go into great amounts of detail, but just look at Syria. Ukraine, look at Iraq, look at Afghanistan, and the list goes on. They have not succeeded in any of their aims, and to destroy the Russian economy failed. In fact, Russia's economy is stronger now than it has been for some time. So in that regard, I mean, I'm not concerned. I know people get very bent out of shape about cryptocurrencies and regulators, but it's interesting to talk about the US because some interesting comment has come out lately from regulators. Now, in the US, there's talk that they're going to ask the Congress to pass legislation to improve oversight of virtual, currencies, as they refer to it, like Bitcoin, because they're concerned about the risks posed by its adoption. Now, there was comments by the SEC before the Senate Banking Committee saying that, federal authorities are considering new laws to scrutinize, currency trading and investing. Now, the SEC, who kind of testified alongside the CFTC, said that those agencies were coordinating with the Treasury Department and the Federal Reserve on the matter, and adding that lawmakers may have to clarify and enhance regulatory powers. Now, people are obviously going to get a little bit concerned about that, but what they're doing is the agencies have said, well, effectively, they're using this hearing that's recently happened to showcase efforts that agencies have made to police markets and to highlight limitations in the current US regulatory structure. Because obviously virtual currencies fall into this grey area between the SEC, the CFTC, the Treasury, the Fed, and state regulators. And obviously the SEC and the CFTC have questioned how respective agencies would fund increased scrutiny of this, virtual currency market, as they refer to it, because they need people to staff and trade, the trades and the market sort of division. So the question is, where do we go forward in this? Now, as yet, there's no clear position from the US perspective about whether they'll pass even virtual currency regulation and legislation, because there's a recognition that the underlying ledger technology, blockchain, offers significant, positive potential to increase investor access to financial market. So they understand the benefits. But likewise, they're rather concerned about the downside, where people can be, ripped off with ICOs. People can have their wallets stolen, and there's no accountability, and you can't go and complain to someone and get them to investigate it. Unfortunately, when it's lost, it's gone. Now, in some way, shape, or form, there needs to be some element of way of protecting investors in any market. Now, once again, people will go, well, see everything very black and white. It's like, well, if we're going to have regulation, it's going to be like the old days and when we have the cabal and their form of regulation of financial markets. Well, no, it's not. There's a third way. It's somewhere in between, where once the cabal's gone, we're going to have to still have some sort of financial regulation. But the problem with the financial system isn't the financial system, it's the lunatics that run the financial system. And once you remove those people, then you can start having sensible adult conversations about how regulation has to take place. Because you're still going to have to protect investors and make sure they don't get ripped off, make sure they don't get the virtual currency stolen. And what regulation can be put in place that's applicable and is fit for purpose, not currently the regulation we have now in the financial markets, for sure. But to go to the extreme and say no regulation, total decentralization, for me is not going to work in the long term. And you're not going to get a significant global uptake and adoption of cryptocurrencies on that basis, particularly when people hear terrifying stories where there was the theft from the Japanese Bitcoin exchange recently. Coincheck, I think it was around $500 million was just stolen. Now, when people see those headlines, they get fearful and they don't want to touch cryptocurrencies. Well,
right.
Certainly in the future, there will be global adoption, but it's not going to be based on how things work now. And, if people don't like it, well, unfortunately, that's the way it's going to be, because without it, there won't be global adoption. It just simply won't happen. And the other problem is, from my perspective, and people will disagree, but I see, what I call, obviously, the first generation cryptocurrencies, it's largely a fiat feeding frenzy. People are making massive fiat profit. Great, if you can do that, fine. But that's what it's about. It's not about long-term investment and people holding it. The people who are moving the price are trading in and out of this on pretty significant margins, making huge amounts of money. but it's eventually all ending up back in fiat currency.
Right.
The idea that it's somehow sucking all this fiat currency out of the financial system and everyone's hanging on to Bitcoin. If that was the case, the price wouldn't be wildly fluctuating the way it is now. It's clearly, obviously, it's a trader's market. People are trading in and out of it. They may be trading into other coins, of course, as well. We can't eliminate that as being a distinct possibility. But the reality is it's just a fiat feeding frenzy, and particularly in the Far East, that's precisely what's being done. And that, as well as, comes into the question when, well, okay, if people are making all these profits, do they have to pay tax on it? And that's something else that, in the Far East, the Chinese, the Russians, and other nations are aware of. Well, hang on, people can make all this money. Well, are we going to actually tax them? And what's the appropriate level of taxation in the case of capital gains tax, for example? Because you can't have a situation where people can make millions and billions of profit and then there is no sort of accountability for that money and do they have to pay an appropriate amount of tax? Well, if they don't, then people are just then actually allowing the very things they're complaining about now in the financial system, where people make a huge amount of money and there's no regulation, or the regulation doesn't apply to them. So you have to get the balance right somewhere in the middle between the two extremes, and that really is the future of what will happen with cryptocurrencies and why asset-backed cryptocurrencies will be the future for me. This is the second, third, fourth generation. They will be a lasting, new financial system. But also, gold and silver will be an integral part, in fact, be pivotal to the new financial system. Those people who go, there's no future in gold and silver, simply do not understand where the future lies in terms of sound money with, gold-backed currencies, a return to a gold standard, and the end of fiat, fiasco, really, and there's no other word for it.
Exactly. And I agree wholeheartedly with that gold and silver are coming back. Otherwise, they wouldn't be, central banks wouldn't be filling their vaults or just holding on to what they say that they have in the central banks. I mean, Canada's the only central bank that has sold any of their gold recently. I mean, as far as a large amount, I mean, some, Germany has sold a little bit over the past few years, but for the most part, they're holding on to what they have or adding to what they have. And go ahead.
Well, the other thing is with gold, which is, I've said this many times, China and Russia have infinitely more gold than people realize. I mean, Russia has around 40,000 tons of gold, and China is not quite as much, but not that far behind. That's the reality. They have been building up enormous gold reserves for years.
Yes.
I mean, back in around 2012, and for a considerable period of time, 1,000 tons of gold was heading from the west to the east, and it was ultimately all ending up in China, Hong Kong, and places like that.
Right.
And why? Because they're building for a future. China, as a good friend of mine always says, China always has a plan. It's just not everyone's aware of what that plan is. But certainly in terms of gold, they're accumulating as much gold as they can get their hands on, and have been for many years. And if people think gold and silver has no relevance anymore, why is the price so massively heavily manipulated?
Exactly.
In a southerly direction, if it has no relevance? I mean, and that's in very simple terms, that demonstrates precisely why it does have relevance and it has a future, and it will be an integral part. So if people think that, the likes of Bitcoin, I heard people saying to me, Bitcoin's going to replace gold and silver. Gold and silver is a barbarous relic that's had its day. Well, tell that to the Russians and the Chinese, and they'll look at you with very puzzled expressions on their faces.
Yes, they will. Among other people that would look at them sideways and question their sanity. Last thing, and then I'll let you get back to your afternoon or evening, Paul. And it's along the lines of gold and silver and where we're currently at right now as far as this economic currency transition. I mean, obviously, people that want to fare well in the future, it might be wise to have some gold and silver as part of what you're doing. I'm not advocating. You do with your money whatever you want. I'm not giving financial advice. I'm just saying that it might be a prudent part of your go forward plan. What should we be doing right now with gold and silver other than acquiring it? I mean, should we be trying to establish payment mechanisms like what gold money has done? Should we be supporting some of the gold-backed cryptocurrencies that are out there, like Zen Gold or Oracrypt or Gold Mint, or what should we be doing as far as to better protect ourselves in regards to gold and silver and the future that you have been describing?
Okay, I mean, obviously, likewise, I can't offer people financial advice, and I'm not even going to, attempt to do so. Purely from my perspective, is gold ownership, and it has to be physical metal. Don't buy ETFs,
right?
Whatever you do, make sure it's physical gold or physical silver. From my perspective, I see significantly huge upside in both, but even more in silver. If you look, really, silver is way more manipulated than gold, and currently the ratio is about 80-1, gold to silver, which is absolutely ridiculous. The ratio should be about 20 or 30-1. So that alone just shows, if you gap that up now, there'd be a significant, silver should be trading probably at $35, $40, $45 an ounce, not currently around 16, 30 or whatever, because it's obviously been hit again today. So yeah, make that part of your portfolio. Undoubtedly, it will significantly increase in value in the future, but also it protects you against all financial eventualities, whatever may happen. And none of us can have a crystal ball exactly what is going to happen once we have this reset and it's the end of fiat currencies, and particularly for the US in terms of what replaces the US dollar, and how much is it going to be devalued, and what's that going to do to the US economy? Well, if you own physical gold and physical silver, then you'll protect yourself in that regard. I'm not entirely sure I would look to invest in, this is only my personal opinion, people will disagree, I'm not kind of interested in any first sort of generation cryptocurrencies as they exist now. That's just, I'm never invested in any, and I'll put that on public record. I've said it before, and I've never touched them, and I'm not interested in touching them. I'm only personally interested in precious metals, and particularly silver more than gold. And that's a protection for whatever comes about in the short, medium term. Now, in terms of going through a reset, the reset process will be relatively quick. It's not going to be some drawn-out thing that lasts for months. It certainly isn't going to be a lot of what people imagine it's going to be. Essentially, it resets everything to sound money. Now, the question then people say is, well, what's going to happen to the price of gold? Well, if you're going to set a financial system against gold, so you can reset the gold price to whatever you want to calibrate it to fit the global economy and nation's economy. So what's the reset in the gold price going to be? I don't know, and it doesn't really particularly concern me, but it will be significantly north of $1,300. You can be sure of that.
Well, and I don't mean to interrupt, but it doesn't matter if it's 1,300 US dollars, or what if it's 10 of the 10 units of the new currency? It's still an ounce of gold measured in the new unit of account, whether it's a dollar or yuan or whatever it is. It doesn't matter, because the value that it holds will remain the same. And if it's the only way that I can wrap my brain around it, Paul, is that 10 units of account, new units of account, are the exact same as $1,300 today. It's the same thing. It's just a different.
Yes, exactly.
It's just this new way of looking at it, and that's all that it is, right?
Yeah, exactly. I mean, of course, the other thing is people will say, well, if I've got fiat currency, what do I do with it? Well, unfortunately, you're still going to have to pay your bills. You still go to work. You get paid in fiat currency. You still have to live your everyday life. So, and unfortunately, there's a lot of people who can't afford to buy anything, whether it's whether they believe in cryptocurrencies, this generation, the next generation, gold and silver, of course, they equally have difficulties in that regard. But as best as you can, that for me is the way to prepare for the future, and is to own precious metals. But that doesn't mean cryptocurrencies and blockchain it will have a massive future, just not how it currently is now, from my perspective. And asset-backed cryptocurrencies will be a huge sea change in terms of how cryptocurrencies are adopted in terms of nationwide, but also globally, and inside maybe the likes of the EAEU and maybe in future in the European Union at some point will adopt something. I don't know, that's not in the pipeline, but certainly the EAEU is in the pipeline.
Yes.
And the other thing with nations like Russia and China, when they tell you they're going to do something, they're already doing it. And if they tell you it's nearing completion, it's already gone through the testing phase, and they already know it's robust and it works fine. So you can expect to see the rollout of crypto rubles, and I'm going to call it the crypto yuan. It probably won't be called that, but those sort of things will happen a lot quicker than people realize. We're not talking years off before they're ready and they're rolled out and they're adopted. So, I mean, and that's the other thing we need to factor into our thinking, is that, whatever the Chinese and the Russians will just very cleverly get on, do what they need to do, how they need to do it, and they don't think there's any need to announce to the world and telegraph everything they're doing going forward. And that most certainly has been the case in the gold markets. It most certainly is the case in the cryptocurrency markets. And that's how they'll do things. And one day they'll just come out and announce it, that, there's going to be the rollout of this, or, there's going to be the rollout of a gold-backed yuan. And interestingly, talking on the subject, and I said this the other day on Rogue Money, and it doesn't mean that China is now using a gold-backed yuan, but recently there's been some analysis that I became aware of, that the yuan is tracking the gold price pretty closely, which tends to suggest it's acting in a very loose sense, like a quasi gold-backed yuan. But I use that in the very looser sense of the word. It doesn't mean it is a gold-backed yuan, but it's an interesting bit of analysis, and it remains to be seen if it's just an anomaly or it becomes something we see, repeatedly occurring over the next weeks and months, because it would suggest there may be some validity to that particular argument. But at the moment, it's interesting that we're seeing that correlation.
I would say that if you and I have another conversation around the end of summer and that correlation is still there, then I would say there might be something to it.
Yes, exactly. I mean, at the moment, there's that saying, there's lies, damn lies in statistics. So we have to be a little bit careful that we don't jump the gun too quickly. But it is an interesting analogy that we are seeing that happening. And certainly, at some point in the future, China and Russia will roll out gold-backed currencies. European nations will too. The question, therefore, then becomes: is what about those nations that don't have, significant gold reserves? How are they going to manage their gold-backed currency, or how are they going to manage their asset-backed currency, whatever that is? So it's not a simple, sort of one brush stroke fits all. For example, like Mexico, they have huge silver reserves. Well, can they back the peso with silver? Yes. Could another nation back its currency with some other asset or commodity? Yes, it's entirely possible. And the interesting question is, what does the US back its currency with? Because despite the idea the US has 8,000 tons of gold, well, I'm still waiting for someone to prove definitively that's the case, because I don't see any evidence that the US has around 8,200 tons of gold.
Yes. It hasn't been seen since 1954, I believe. So that's...
And a lot can happen in a year in the gold markets, never mind in
5
50,
decades.
60 years. Yeah.
6 decades. So, well, we've been speaking with London Paul, and Mr. Paul, you have been extremely generous with your time. I did not mean to take up as much of your time today as I have.
We can talk as much as you like. Well, till our vocal cords pack up. But no, it's always it's a pleasure to talk about things. So have no worries about the length of time we've spoken.
Well, I certainly appreciate it, and I hope that we can do it again in the future, because this has been very enlightening in so many ways. And if you would, Paul, just tell people about what you have going on over at the Cirrus Report and how they can find you and get involved with with all your work.
Okay, well, first off, yes, it'd be a pleasure to come on again. So we'll do that sometime for sure. Yeah, the website's thecirrusreport.com, SIRIUS. And obviously we have on the website, there's lots of free content. We also do have a subscription service, which is $4.75 a month. And you get 5 podcasts or equivalent a week. It's about 15 minutes each one. It's very compact information. It's all current geopolitical, economic, analysis. We also go into a lot of things that subsequently down the track come to fruition. So we have a good track record of predicting future events in pretty significant ways. And we'd encourage people to subscribe. We think it's, relatively cheap. In fact, compared to most people, we think it's extremely cheap. We have a lot of people who've joined and they've stayed with us and they enjoy what we're doing. So we're very grateful for their support. But, we're always looking for new subscribers, and we'd really like people to get in touch as well. If you want to ask other questions, you can get in touch with us via the website. And of course, we have the Twitter account at the Cirrus Report, and we have the Facebook group called the Cirrus Report. And thank you, for having us on today. It was a real pleasure, and we look forward to doing it again in the future.
Well, London Paul, I certainly appreciate it. It's been a real pleasure, and like I said, it's been very enlightening and in so many ways. And I really look forward to speaking with you in the not too distant future.
Yes, and likewise. Thanks very much.